Hello and welcome back to The Investor's Opinion. Is NIO Inc. a good investment? Oh man, you guys have been asking for this video quite a bit, so let's just jump straight into it. Starting with NIO's business model, we can see that it is split up specifically into two parts. The first being their smart EVs and the second being their service side. The smart EV brand NIO includes three important segments of the manufacturing business. One is the manufacturing of these EV cars. The second is of their battery and powertrain technology. And the third is of their BAAS system and their universal battery system. The second half of their business consists of their service package. And this is what makes NIO Inc. actually quite unique comparison to its EV competitors, such as Tesla and any other one of those Chinese EV competitors. NIO Inc.'s service packages include lifestyle products, their phone app, AI, and in general, just an overall management of the responsibilities that come with a car ownership is sort of combined into a single package that is now provided as a single service. And as you can see by the quote on my left here, the Harvard Business Reviews have given NIO quite a premium on their business model based on its unique nature. NIO Inc.'s business motto and goal is to bring all the responsibilities and chores of car ownership and the lifestyle decisions that you have to make in owning a vehicle a lot less complicated and a lot more simple. They do so by combining all of those services into their vertically integrated service package. This is where the company purchases or creates businesses that are vertically integrated into their company. These companies are their distributors or suppliers. NIO provides services such as insurance, roadside care service, their BAAS, which we will get into shortly, and any other minor responsibility or annoyance that would come from owning a car, such as airport parking. NIO Inc. isn't about making cars, it's about creating the experience around cars simpler and less time consuming. So now that we've covered NIO's broader sort of business model concept, we can move on to our qualitative analysis. Now on this channel, our qualitative analysis is a SWOT analysis. Strengths, weaknesses, opportunities, and threats, all of which can be used to create a long-term or short-term thesis on our potential investment strategy. Jumping straight into strengths, we can see that one of NIO's strengths is primarily actually their battery and powertrain tech. And this is because NIO do something quite different and was something that Tesla actually looked at but decided to go against due to the build of their powertrain. However, NIO in this particular instance went with the latter and decided that battery swap technology would be their primary battery technology. These battery swaps are a part of their BAAS service. This is the batteries as a service and not a product. And this is something that NIO take quite seriously as it is a part of their overall business structure of being a service and not just a singular product. Next, we have the obvious, this is an electric vehicle company. They have a lot of policy and regulatory tailwinds that will help them in the future. Another technological preference that I would actually also like to mention about NIO is that they have amazing AI tech. Lastly, I'd like to mention that NIO has a pretty amazing social media presence for a company. Most of the time, companies are either too slack to post or are too aggressive in their posting strategy where it turns a lot of people away. However, NIO have done quite well, have grown their social media presence. I myself follow them. I mean, I am an investor, disclaimer. But overall, positive sentiment, positive headwinds, a lot of growth in the future potential. Now moving towards the weaknesses, this company, just like space, is currently what I would define as a speculative stock. Now I know I'm going to get a lot of hate for saying that, but it is important that we manage our risk effectively and show great discipline in the stock market. The speculation comes from their business model. Originally, NIO planned to build their own factory. Now these plans were scrapped when the province that they were trying to build the factory in decided that they were too risky. The worry was that this investment would fall apart in the future and that these people would not get their money back. Fortunately for NIO, they found a way around this, and it's now a part of the speculation that we're saying that their now new business model, which is where they outsource or vertically integrate. However, being outsourced and in a partnership with JAC Motors, this is the company that they manufacture their cars through, does give through some limitations in the long run with respect to manufacturing quotas, how much they are able to ramp up in this factory as they are subject to JAC's decision making. This new structure of outsourced manufacturing allows them now to focus primarily on their product being adopted through these much more vertically integrated service packages than other companies do with just shoehorning the product down your throat online or through adverts. Obviously, there's geopolitical risks that are involved. This is a Chinese company, and currently between the US and a few other nations, there aren't the best friendships between China and other nations right now, especially from an economic perspective. And again, you're going to have to account that as a risk in your investment here. Last few points I'd like to point out is that obviously they have no positive fundamentals. These guys are in the very early stages of this automobile lifestyle, new unique business model that they're trying to create. And therefore they are going to be highly leveraged, lots of debt, and they're probably going to have quite a high cash burn rate because the cost of building and researching and development of these vehicles and to pump out the technology and to ramp up this is going to cost a lot of money for NIO to get. And thankfully funding is available. But that is something that we're going to see as a weakness for the current and immediate investment. Now moving on to opportunities, we can see that there's quite a few opportunities that we have as early investors in this particular company. Obviously, these things will be considered as catalysts moving forward and will likely move the stock price higher. NIO has become incredibly popular on the US stock exchange, particularly in the NASDAQ. It's one of the most traded stocks on the US exchange, according to Yahoo Finance. This is going to give the companies and the company and their products an incredible amount of exposure to the public. This could entice these customers to actually try their products, and these products have a lot of stickiness. This is where the consumer either is a returning one or just continues to perpetually use their service because it's just easier to stay with them and it's an easy and well-produced service. This is great and exactly the way that this business model is supposed to work. And lastly, obviously, we've just heard the announcement that they are planning on ramping up the production at the JAC facility and that they will actually finally be going international, entering into the US and European markets probably in the next coming year. Now moving on to your final one, it's your threats. I have to mention it, but Tesla's literally just shut up shop in their backyard. They are competition to some degree, even if their business models don't align. So, you know, like NIO need to sell cars, Tesla need to sell cars. People aren't going to buy a NIO and a Tesla most of the time. There is competition and they are a damn big kid on the block to be competing against. Another more important aspect is that their batteries as a service concept may be fully rejected by the Western world. And this would be absolutely disastrous for NIO in its international expansion efforts. Hopefully this isn't the case and the technology that we've been shown through video has been just as good as we once thought it would be. But the possibility is there and we need to monitor international usages and the amount of times that they're being swapped. If they're significantly lower than China's number, then we may have some issues in regards to its adoption in the Western world. Also, another aspect to talk about with COVID-19 being the staple of what's happening in the immediate economy right now, we should make ourselves note that Hong Kong is not doing particularly well right now, and they are essentially the financial gateway between the Western worlds and China. Now, the last part of our qualitative analysis is usually our Warren Buffett famous economic moat thesis. In this particular instance, I've created my own economic moat thesis in regards to where I think NIO is going. I think the moat, what keeps this company safe against its competitors in the long run, is the fact that there's so much stickiness that comes with their products and service packages. Why would you go back? You're no longer allowed to access their application or their service or roadside services, their insurance services, any of the services. So you're going to have this big consumer loyalty that's going to come from this business model. The key is getting people into the business model. Now we move on to the quantitative analysis. Because this company is a speculative stock, we don't have to go over the quantifiables too much, as most of them are going to be as expected. So what we will go through in this particular instance is the financials and what we would expect. And then we'll take a brief look at their income statement and balance sheet. So what are we expecting? We want to see high levels of growth. We want to see 100, 150% manufacturing increases, delivery number increases year over year. We're going to see high debt. We're going to expect that. We want to see high debt. We want to see big, large amounts of funding coming their way, and we want to see them putting that to use either in research and development or just in ramping up their production line. We want to see increasing margins. We want to see them cutting the costs of their manufacturing process, and we want to see them modeling their business in a way that allows them to reach profitability as soon as possible. Footprint growth, very, very important. We need to see them grow a footprint in every geographic region that they enter into. Just like I mentioned before, their stickiness is the most important tool within their business model that they need to utilize by enticing consumers into their product range. We're going to expect some volatile valuations, and we want to see some funding at any time, and hopefully some evidence of a ramp up. Jumping straight into the income statement, we can see that gross profits are in the red. They are making a net loss. However, that net loss is decreasing year over year. These are all what we would expect in this particular company. Moving next to the balance sheet, we can see that total assets equal 4.92 million, current total liabilities 9.49 million, which is of course an overall net negative, which is expected. However, that this does mean that if total current liabilities are larger than their total current assets, this means that they are relying on short-term sales and profitability to operate. And this obviously, if they're not selling or delivering vehicles, they're not going to last for very long. Thankfully, this isn't the case. Deferred revenues are going up, which is a good sign for a company like this, as deferred revenues are payments paid early. And an increase in this means that people are prepaying for products or potentially pre-ordering them. Moving lastly to a technical analysis on the stock price, we'll give a general consensus, then we'll look at the charts, the price movement. Then lastly, we'll look at our two favorite indicators, the RSI and the MACD. Obviously, we've just had a massive run-up. However, in the last week and a bit, we've had a bit of a sell-off, but this is within our expected volatile movement. This is a very speculative stock, and this stock is going to have large and exaggerated run-ups with even larger and sometimes more exaggerated pull-downs. Consecutive red days for NIO Inc. would indicate possibly a good time to start entering or building a position in this particular stock. And this is generally because the broader indexes are actually showing incredibly bullish signs, especially the NASDAQ. However, the recent pullback that we saw with NIO has mostly actually been technical driven. We've actually had a lot of gap ups on the daily openings. Remember those big 20, 15% plus days, and that's left big gaping holes in the chart. We'll likely come down and fill some of these gaps. There's generally somewhat of a technical thesis that people come along with, is that stock prices in the short term will come back down to fill the gap in with candles before it starts making its ride back up again. And this is a good way of basically saying that the stock is cooling off. So moving to the chart, we can see that this stock has had a 300+% movement in the last 3 months. Then about a 35 to 40% retracement from its highs. However, this price movement does indicate a perceived valuation change. And what I mean by a perceived valuation change is that investors in the sentiment around NIO prior to its massive run-up were quite dire. The cash burn rate was very large, still is, but they had no funding, they had no cash. They literally had a quarter left of money to burn through before basically Chapter 11 was filed. Once the Chinese national government came in through their various amounts of financial tools, they effectively funded NIO with billions and hundreds of millions of dollars to continue their operations. This meant that the stock price has now changed from one that is essentially a quarter away from bankruptcy to now a company that can continue to operate, hopefully, into profitability. Moving to the RSI and the MACD, the RSI shows some short-term consolidation, possibly even a little bit bearish, but does signify a massive cooling off from its huge 300% run-up. How far it retraces in total over this time will be very interesting to see. However, the MACD does signify some stability in the stock price as it does begin to cool down, and the stock will be looking for a brand new direction to go in with hopefully the next round of media sentiment. So that's it. So I looked into NIO's business model quite extensively. And from what I can see, fundamentally, NIO's business model is quite good, but it does have some flaws in it that I would like to point out just quickly here in the last part of this video. Tesla's business model is akin to Apple's, where it vertically integrates their distributors and suppliers very aggressively, from all the way down to the raw mineral mining for the batteries and steels and metals that they need to build cars, but also all the way through to their distributors and the way they distribute their product. NIO is going through the same sort of activity, but coming from the concept of the quality of life element that comes from owning a car, as opposed to the technical fun and joys of having one of the most technically advanced cars in the world. Basically, you're betting on that manufacturing of a vehicle doesn't have to be immediately vertically integrated into a company for it to become long-term profitable. Anyway, thank you so much for watching this video. I wanted to make this video in such a way that it would be beneficial to an investor looking to add a speculative stock to their broader portfolio. And I hope I've done that for you today. Thank you so much again for watching. Please drop a massive like and a subscribe, and don't forget that ding that bell button. It does tell you when I drop a new video, and that is always great for my new channel as we are in the early growth stages. Have a good one, and good hunting.